The Treasury Department's suggestion that tax cuts will more than pay for themselves is under close scrutiny. The department projects a revenue gain of $300 billion over 10 years, but two nonpartisan groups say tax cuts would add at least $1 trillion to the deficit. Mark Weinberger is CEO and global chairman of EY, formerly known as Ernst & Young. He's also a former assistant Treasury secretary on tax policy under President George W. Bush, and he served on the Social Security Administration Advisory Board under President Bill Clinton. Mark, welcome.
Thanks, John.
The president and Republicans have sold this as a middle-class tax cut. When you look at the entire tax cut, all that it does, is this a middle-class tax cut?
This is a tax bill that will affect every business and every individual in the United States. Foreign companies invest in the United States as well, John. It will, in my view, increase investment in the United States. It will make the system much more competitive, allow companies to reinvest in workers, bring that foreign cash back to the United States. And it does provide for a middle-income tax cut by doubling the standard deduction, increasing the child credit, and lowering the brackets.
But as a truth in advertising thing, Mark Sanford, who cares a lot about debt and deficit, which we'll get to, but Republican congressman from South Carolina says this is, quote, a corporate tax reduction and restructuring bill. That's what the bill's big part
about
is.
$900 billion of the $1.5 trillion goes to individual relief through the pass-through entities. 95% of businesses in the United States are pass-throughs, and the individuals. About $400 to $500 billion is for corporate relief. Remember, in addition to the tax cuts for the corporations, there's a lot of tax increases. It scraps some 50 credits and deductions. It puts new provisions in to prevent what they call base erosion from companies moving assets and income overseas. So it disallows for the first time interest deductions for highly leveraged companies. That offsets some of the tax cuts for corporations.
But will the bulk of the benefits from this tax bill go to middle-class families?
I think the benefit will to workers who are going to be working in these companies. When the money comes home, we have a Business Roundtable did a study, and the CEO said that 76% would invest more in workers and wages if this tax bill were to pass. 81% said that they would invest in capital equipment, which would make workers more productive, which is what we need in this country.
Is there any evidence that that has happened in the past?
Well, it's hard to know. So in 2001, we did, as you know, when I worked for President Bush, we did a tax cut. And in 2001, we had a 1% growth rate. By 2002, it was a 1.8%. 2003 was 2.8. What percent came from the tax cuts? What percent came from just growth in the economy? You don't know. In that case, it wasn't a business tax cut and it was phased in. This is immediate expensing of equipment. It is immediate drop to 20% corporate tax rate. It is allowing those companies to bring back that cash overseas. I think it's clear that money will come back to the United States in some way or form.
Yes, Mark. The question I was asking, is there any evidence that those companies will then reinvest that in workers?
To the workers.
Yeah. Only what the CEOs are telling us. I mean, you don't know because, listen, it's not going to create new demand that doesn't exist today. So it has to, when a U.S. company gets a tax cut, it can only do three things with it. It could either invest in new plant and equipment, it could either pay workers more money or increase hiring, or it could pay the money back to shareholders. It can't do anything else with that.
Mark, I think you're one of the smartest people on this issue, and you've worked for Democrats and Republicans. But that's a pretty big, we don't know whether corporations are going to pass that, especially if you're going to add $1.5 trillion to the deficit.
But what we do know, Norah, Democrats and Republicans recognize that the U.S. business system is so anti-competitive. We talked about inversions in the last many years about companies moving their headquarters overseas. What wasn't talked about is the large number of companies that were acquired by foreign companies that no longer are in the United States. It's going to arrest that because now it's going to make the U.S. a place that companies will want to invest. That's a good thing for workers. It's a good thing for business. Today, U.S. multinationals employ 25 million people, 50 million in the supply chain, and 75% of the value add, 75% of the R&D, and 2/3 of the workers are where a company's headquartered. You want those businesses to be in the United States.
Want it to be a strong economic environment.
Yeah.
Mark, great to have you here.
It's always a pleasure.
And by the way, you talk fast too, so you get so much information.
I was thinking that too.
Yeah.
I had to get it out.
I know. Thank you. Thanks for being here.
Gives good TV.